Hello all, and thanks for clicking on this short video presented by Eger CPA. My name is Jason Eger, founder of Eger CPA, and we hope this video will give you some good ideas of year-end moves to make for the 2021 year. Let's hit the easy ones first. 529 plans are often confused. The deadline to make these contributions for 2021 is 12/31/2021. It's not the April 15th deadline. So for those grandparents out there, if you're looking for a great gift for your kids, you could donate to the kids' 529 plan. It's a great deal. You get a state tax deduction with it. The next one is gifting to family members. A lot of people, again, confuse this deadline with the April 15th deadline. Any gifts for the 2021 year must be given by December 31st. So as a person, you can give $15,000 to any other person. So I can give $15,000 to my daughter. I give $15,000 to my daughter's spouse. My wife can give $15,000 to my daughter, and my wife can give $15,000 to their spouse. So there's no limit on how many people you can give $15,000 to. So think about that as you're doing your gifting before the end of the year. The next one to think about is charitable contributions. For 2021, they actually raised the AGI limit. You can actually get rid of your entire tax limit by donating everything to charity. So think about that. Jeff Bezos could donate and get rid of all of his tax liability. Not a bad thing. Better use for him than have the government spend that money for you. So a couple of quick tips though on charitable contributions. Better to donate appreciated stock rather than cash. Therefore, you don't have to pick up the capital gain on the stock, but you get the full benefit of that fair market value of that contribution. So again, better to donate appreciated assets rather than cash. Another quick tip for those that are over 70 and a half and pay and have RMDs out of your IRAs. If you have those RMDs go directly to a charity, all or a portion of those are now considered non-taxable, but they do count as part of your RMD. So if you have a large IRA and you have a lot of income coming to you and you don't necessarily need it all, have the contribution go directly to a charity rather than you taking the money first and giving it to a charity. And then for those in the growing class of folks that don't itemize your taxes, you can still deduct $600 in charitable contributions regardless of whether you itemize or not. So still a good idea to give some money away, and definitely give that to your tax preparer at the end of the year so we can take advantage of that deduction. The next thing we're going to hit is tax harvesting and capital gains. Okay, if your income dipped in 2021 and you're in that what we call the 0% capital gains rates, for a married couple, that's your taxable income of $80,000 or below. If you're in that situation and you have a stock portfolio, you can sell appreciated stock and not pay any tax on it so long as your income doesn't pass that $80,000 threshold. Why this matters is if you had some Apple stock you bought years ago, you could sell it if you stay under those limits, pay zero federal tax on that, buy that stock back 30 days later, and now you've just increased your basis. So when you sell it down the road in a high income year, you won't pay any tax on that income. So always a good idea to increase the basis of your assets. Conversely, if you have high income in 2021, you're sitting on a few losers in your stock portfolio, go ahead and sell those before the end of the year. You can use $3,000 to offset ordinary income, but you can also offset any other capital losses you might have. So it's a great idea to look at your tax brackets and maximize those benefits. All right, last but not least, one of my favorite topics is Roth IRAs and backdoor Roth IRAs. Our basic philosophy here at our office is that you should try and get as much money into a Roth IRA as possible. The tax-free benefits of that in the future years as you're withdrawing money down in your later years is a powerful tool to make Social Security and other things non-taxable. So if your income is down in 2021 and you're in a lower bracket, again, I'm using that $80,000 or less. Even if you get a little above that, you're in a 12% tax bracket. That's a great time to roll some IRA funds from a taxable account into a Roth IRA and then let that grow tax-free until retirement. So again, if your income's down in 2021, it's worth looking into rolling all or a portion of your IRA into a Roth. Conversely, if you have your income's a lot higher in 2021 and you have excess cash laying around, we highly recommend doing a backdoor Roth IRA, which basically you put the money into an IRA and then roll it into a Roth IRA. That needs to be done before December 31st. And the reason for that is that possible loophole is on the chopping block for the new tax bill that may be coming out. So again, we're recommending people get that done before the end of the year, as that law may change and disallow those moving forward. So our basic goal is to help decrease the tax while increasing your net worth. If you have any questions for us, please reach out to Eger CPA. Thanks a bunch.